Welcome, everybody. March 2nd, the market update desk with Scott Riley, NMLS 157524. We have a lot to talk about on Operation Epic Fury and the repercussions, near term and moderate term, for what's happening in the market. Um, Obviously, everybody knows that the operation that started on Saturday in the Middle East, we were on top of things, talked to a lot of our customers on the refinances, got them locked in, protected, because we had a suspicion, which ended up being correct, that we were going to have an uptick in rates and pricing today. And of course, that is happening. Right now, the Dow is down a couple hundred. Mortgage backed securities are down 28 basis points. 10-year Treasury is up 9 basis points in the yield to 4.04. Let's talk about what's causing that, what the concern is, what we're looking at and advising people on. So, we're seeing oil jump up, which is expected with all of the activity, specifically in regards to the Strait of Hormuz and how oil is going to flow. Then we have how that flows through to increase in utilities from oil and how that can affect short term or near term inflation numbers that we had expected to go down. And what's going on with normally what we see in a flight to safety to our treasuries. Normally, when we see major geopolitical and economic um, spikes in the world, we see a flight to safety to our treasury, specifically the 10-year treasury. It's not happening really today, and there's a lot of reasons for that. Obviously, there's been contentious tariff negotiation and conversations, specifically with Euro and United States. That's having something to do with it. Oil is up about $3 a barrel right now. So we're seeing an up pressure on oil, as we talked about, that can affect uh, utility prices and inflation. And really, instead of the flight to safety and treasuries, we're seeing more of a flight to precious metals, gold, silver, platinum, things like that. So those are going up. Is this short term? Where are we going to go? So when we look at the last probably three major events, specifically in the Middle East, when it regards to oil and the downflow of oil production and pricing. So we go back to 2020. There was a death in the Middle East of one of the generals for Iran. So on January 3rd, oil price was $60. That spiked up after that event to 66. But yet a week later, January 13th, came back down to 58. So just slightly under what the price per barrel was before the event. 10-year Treasury was at actually 1.79%. Kind of crazy to think that. After the event, it spiked to 1.89, 10 basis points up. Afterwards, it settled back a week later at 1.81. So a net 2 basis points increase in the 10-year Treasury after that event. 2023, we had the attack on Israel from Hamas. On October 6th, oil was $82 a barrel, 10-year Treasury at 4.7. Immediately after that, it jumped up to $90 a barrel. 10-year Treasury jumped 30 basis points to 5%. 2 weeks later, oil went down to 83 a barrel. 10-year Treasury was at 4.83, but yet a week more removed from that, 10-year Treasury was up only 3 basis points from where it was before the event. 2025, when when the United States did an attack on Iran on their nuclear sites, June 12th, oil was 65 a barrel. After the event, jumped up $9 a barrel to 74. A week later, settled in at 67. 10-year Treasury went from 4.36 before the event to 4.46, 10 basis points. After the event, settled back down at 4.29. Why do I go through all that? So it's not immediate reaction, but what we're seeing is that the markets do settle in the neighborhood of 10 days to 2.5 to 3 weeks after an event of this, depending on the prolonged nature of the event and the continued movement of oil. So my idea is we're going to see in the near term oil and treasuries increase. But I think, that's going to settle. And specifically, we've got the jobs numbers, ADP, and BLS jobs report coming out Thursday and Friday. My educated guess is I think we're going to settle back down to where we were before this event, maybe even a touch better, because those job numbers, which are expected to be 60,000 for the BLS, I'm sorry, 50,000 for the BLS report, I think it's going to come in less, and there's going to be negative downward revisions to the January report, because that typically is a highly downward revised report, because it's been, for many years, at least the last five, has been way off on its initial report. So we get through today, we get through most of the week. I think we're going to see some calmness in the market once we get to Friday, and then specifically next Tuesday or Wednesday. So we'll stay on top of everything. We had two buyers out this weekend make offers, waiting to hear on those. Refinancing. Take the opportunity to seize the rate that are out there now, instead of waiting. Every month you don't refinance, you're losing money. Give us a call. We'll break down those numbers, go over anything that you need, help you get pre-approved. 616-293-2189. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan.